All right, and we are live. Holy cannoli, stocks are in free fall. It all started last Wednesday when President Trump announced the new tariffs. It was after the markets closed, and ever since it got worse. Really bad on Thursday, Friday, and this morning also markets opening massively lower. But then some news, markets pushing higher, but still some uncertainty. And you know what? Well, just like this of what's going on. We also see Bitcoin down, gold down, crude oil down. Everything is down. So how much longer until this is over? And can it get worse, or is right now a buying opportunity? Well, that's and much more we'll talk about today. And with that said, welcome to Coffee with Markus and Mark. And today is Monday, April 7th. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And boy, Mark, I mean, look at this. Over the past few days, a market meltdown that we haven't seen since the pandemic.
Yeah, what a few days, Marcus. And we went from uh, a tariff talk and a liberation day that actually created one of the worst weeks for the markets in history, with the S&P 500 down almost 10%.
Yeah, in just a matter of days.
9.1. Yeah. Yeah, for the week ending lower 9.1%.
Yeah, crazy. I mean, S&P, but I mean, it's all across the board. So let's unpack this. Let's see. So first of all, if we zoom out a little bit and we look back, oh my gosh, we haven't been at levels that we saw this morning since 2024. Basically giving up all the gains of last year. And as you said, it all started last Wednesday when President Trump announced the new tariffs. Way worse than expected. Everybody expected kind of like 10%, but he had a huge placard talking about, I don't know, tariffs of up to, what was it, 54% or something like this against China.
Yeah, it was a real shocker how it was calculated, and the magnitude of the tariff talk, rather than just 10%, and targeting certain countries, but it was really just kind of across the board and everywhere that really threw off investors. I mean, a Trump backer, Bill Ackman, even said that this could potentially create a nuclear winter for the markets. And I mean, that's not really what you want to hear.
No, and this is where we saw on Thursday markets lower, and then on Friday the sell-off intensified because this is where China said, "Well, if you give us more tariff, we give you more tariffs," right? And slapping more tariffs on imports from the US. So it sounded like a trade war, global trade war in full swing. And we all know that nobody wins in a global trade war. Then over the weekend, no news at all. And over the weekend, a 10% tariff on most of the countries was already implemented. And the big one, it's supposed to come this week on Wednesday. That's where we are talking about tariffs against the European Union, China, Mexico, Canada. I mean, the major trade partners. And since there was no news at all over the weekend, this morning markets opened sharply lower. So let's just zoom in here on a 5-minute chart to see where markets opened lower right here, and then pushing even lower this morning, down almost another 5%, pushing now the S&P into bear market territory. And that's where it is joining the Nasdaq and the Russell, which are already in bear market territory.
Yeah, and it's this uncertainty that's leading to such a huge sell off. The White House has said that 50 countries have reached out saying they want to talk, but there's been absolutely no news. And I think a lot of investors, they were concerned going into the weekend, not knowing what would happen on Monday. But also just complete lack of news, other than that the White House wants to reset global trade, and that this isn't just short term. And in the past, there's been a little bit of a disconnect between what Trump's advisors have been saying and what Trump has said. And Trump has basically said tariffs are coming, period. And then recently, his advisor said, "No, we're in this for the long haul." But Trump said, I'm willing to negotiate or hear things out, but just no concrete news at this point, other than tariffs are here.
Yeah. And now we talked about it this morning with our mastermind members. This right now could lead into a bear market, and technically we are, but this, what we see here, is an event. It is very
Yeah.
similar to the pandemic, where we saw that in a matter of weeks, we sharply moved lower. And as soon as this event was lifted, market rallied again. This year, what we see in 2022, that is a bear market. This is what a bear market looks. That was the worries about recession, interest rates staying higher, inflation staying higher. So this is where we saw the market move down orderly, and this was a bear market. What we are seeing here right now is an event, and as soon as we have some good news that maybe it is not as severe, I believe that markets could see a V-shaped recovery very similar to what we see during the pandemic. And this morning, we kind of already have evidence of this.
Sure, sure. So, I mean, I think that this is important to keep it in to put it into perspective, Marcus, because you're absolutely right. In a bear market, a traditional bear market, you have a weakening economy with data supporting it, where you're seeing that GDP is coming down and going negative, and jobs are being lost, and so the concern is that this tariff event and policy could lead to a recession. And this is where JP Morgan has increased the odds of a recession, upping it to 60%. And the head of economics at JP Morgan even saying the size and disruptive impact of US trade policies, if sustained, would be sufficient to tip a still healthy US and global expansion into a recession. This isn't a shift in data week after week, month after month, but instead this event. And as you were hinting at, Marcus, today we saw an 8% move from today's lows to today's highs on one piece of news that the White House has said is fake, but this is that the White House is likely to pause tariffs for 90 days. So now it sounds like that was just rumor and not true, but for the markets to swing 8% just because of one rumor, that just shows you what could happen here.
It just shows that the markets want this to be over. And I mean, at this point, it's a game of chicken. Who blinks first, right? I mean, this is
Sure.
where, okay, we still have to hear from major trade partners. I mean, we already know from China who said, yeah, I mean, if you slap tariffs on us, we retaliate, right? Which Trump didn't like and say, well, you shouldn't be retaliating. Right now, we're still waiting for responses from the EU, from Canada, and from Mexico of what exactly is happening. We also heard that Japan is sending a delegation to the US to negotiate. But right now, still uncertainty. And this uncertainty translates into the VIX, the fear index,
Yep.
this morning, spiking 260. And this is where we see, okay, let's look back at a few spikes. I'm switching to a weekly chart here. So the spikes that we had here, look at this. This is also supporting that this is an event and not yet a widespread bear market. This is where we had the VIX during the bear market. It was somewhere between 20 and 35, right? So this is where we were. This was the pandemic, where the VIX spiked to above 80. This was the flash crash last July. We'll take a look at this in just a moment. And this right now is the current market. So we see this spike, this extreme uncertainty. And then as quickly as it spikes, it usually comes right back. And this is where, Mark, before we go back here, I just wanted to bring this up where we saw this dip last July. You remember last July we had this flash crash where in a matter of days market plummeted, and then also a V-shaped recovery here.
Yep. Yep. I saw that with the VIX, it was as high as 61 this morning, and historically, the VIX at 45 or higher has actually been a buy signal where stocks rally. And you can see that there are times when the market rallies at these extremes over a day or a week or a month, but I saw that 100% of the time with VIX spikes over 45, the market's higher. If you're looking at years to come, so that's not what we want. We'd rather have a short-term spike, which again is supported by these VIX spikes, but not out of the woods yet.
Yeah. So this is where the question is today. Okay, have we seen the lows? Is that it? Or will it get worse before it get better? Because we also knew that during the pandemic, we had the spikes where there was a little bit of hope before the sell-off intensifies. I mean, right now it's be prepared for anything. And we have a deadline looming on Wednesday. So I believe that we will get a lot of news today, tomorrow, and on Wednesdays of what's happening here, of how other countries are planning to respond to the announcement of tariffs from President Trump last week.
Yep. Yep.
And I mean, right now we see that this sell off is across all asset classes. Let me just go here to, for example, Bitcoin, right? I mean, if you look at Bitcoin, we see Bitcoin this morning dipping as low as what, 74,000. I mean, far away from the highs of 110,000 that we just made earlier this year. We also see that treasuries moving a little bit higher now, but the yield has moved dramatically down from what, 4.8 to 3.8. I mean, that is a 20% move in just a matter of a few weeks here.
It is.
Talking about yields and the Fed this morning, a little bit of a surprise here that Fed funds traders now think that the Fed actually might lower interest rates at the next meeting. And Mark, when we looked at it this morning, it was kind of 45% to 55%. What do you think about this? Is the Fed going to lower interest at the next meeting, which is just 4 weeks away from now?
I think it's crazy to think that the Fed will do that. I mean, the Fed has a dual mandate: price stability and maximum employment, right? And sure, the administration with policy has created some instability in the markets, but this is still playing out. And even with what the Fed said previously, that they believe that tariffs would be have a transitory impact on inflation numbers. So I think that for the Fed to act, they're not just going to come out and cut. I think that'd be way premature and actually irresponsible. I know that that's what Trump wants to have happen, but the market has already created lower rates anyway out of concern of a possible recession. So the Fed doesn't really need to do that. I think that right now, Fed funds futures traders are just way too optimistic thinking about a Fed cut.
Yeah, especially since it's only 30 days. I mean, this May 7th, there's not enough data. And if you know one thing from Powell and the gang, is that they are data driven. They always say, we're waiting for the data, we're waiting for the data. I mean, it's basically what we always say: trade what you see, not what you think. They're not reacting based on what they think might happen. They want to see it in the data. So yeah, sorry, Fed funds futures traders, you guys are wrong. This is not going to happen. I believe that the Fed will keep rates steady at the next meeting, and then for the June meeting, probably has more data of how all of this is impacting the economy, possibly. Well, one more thing, Mark, that we should
Yeah, I
take a
think.
look at is crude oil.
Oh yeah, I mean, crude oil was down almost 10% last week as well, and that was just the perfect storm for crude oil because you have the tariff situation, and oil tends to drop when economic activity is expected to decline and be weaker. But then you also have the OPEC members basically increasing supply, so huge drop there for crude oil.
Yeah. So crude oil trading below $60 this morning. I mean, on the one hand, kind of good, right? Crude oil prices lower should help inflation, but this is just driven by recession fears.
Yeah.
All right. Well, let's talk about this week and what's happening, and then we take a look at our positions. But if we take a look at the economic calendar, it could be a big week, and kind of nobody cares. I mean, this is where this week we do have more inflation data coming out on Thursday and on Friday. Thursday, CPI data, Friday, PPI data. But I believe this week it will all be overshadowed by tariff talks.
Absolutely. In a normal week, this would actually be an important week, right? So, in a normal market, you have more inflation data. You also have earnings season kicking off with the big banks. So, most weeks in a normal market, this would be a decent one, especially towards the end of the week. But right now, it's all about the White House, it's all about tariffs and investors wanting to hear more and to see if there's any reprieve or if things are just going to get worse.
Yeah. Nobody today is talking about earnings. Nobody's talking about inflation data. Everybody is talking about tariffs, and what's happening. Will there be negotiations? Will there be an agreement? Or will a global trade war start on Wednesday, which will send the markets in a tailspin, as we have already seen? Well, moving to our trading and our positions here. First of all, we had two WTF positions last week. First up, Chevron CVX was a valid entry signal, and unfortunately, this morning got stopped out.
Yeah, this one with that crude oil drop, it was just it bottomed out. So this one not working out.
Yeah. And then we have Cisco, which is all over the place this morning. The entry at 56.66. This morning, trading as high as 56.12. Um, yeah, as high as 56.12. As low as, where were we? 52 right now, trading at 53.65. Market still all over the place. So we'll see what happens there. Not yet at our stop loss. Right now, solid $2 away, which is around 4%, but we'll see what happens there. And then we had quite a few new signals here, Mark. We had 5 new signals.
We did. And running through those signals, looking at opportunities based on my plan, I could narrow it down to three, which is typically what I would consider. I did choose two that I wanted to get into. I picked up shares of BMY, which are down slightly right now. And I also picked up shares of Take Two Interactive, which is up. So I just took those two today.
All right. So the other ones right now, just also a little bit waiting what's happening here in the markets. But if you did take CVS this morning, you will be a happy camper. The entry signal at 62 right now, trading at 63. IBM, another signal here that was entered at 219. The signal right now trading at 220, also up. And then PLTR, Palantir, another one trading at 66 this morning for the entry, right now at 73. So all 5 signals, if you had trade any of these, are right now up, other than BMY, which is just hovering around the entry price right now.
Yep.
All right, moving over and looking at the wheel. And boy, there is some activity going on. CSIQ, surprisingly, this morning, I mean, CSIQ up 4.23%. Look at this. I mean, opening lower, but right now wants to push back, it seems, into this range that has been established earlier. So still ways to go, but what a move here. Almost, I mean, from the low to the high, we were up over 6%.
Yeah, I mean, it looks like Trader saw this as a buy the dip opportunity.
Yeah. And this, I mean, right now, HAL down 2.75% for the day, kind of like the stock market, still trying to figure out what's happening here all over the place. Nothing for us to do there. IWM, the Russell, boy, look at this, all over the place. I mean, this morning, this is where we had also, I mean, in the S&P, we had an 8% swing. Here, we almost had a 10% swing. But nothing for us to do here right now. Originally, we got assigned at 217, then sold some more puts at the 200 level, and then some more at the 191 level. But right now, nothing for us to do here. But I mean, this is as you can see, ready to bounce back quickly.
Looks like it. Yeah, I was seeing with that volatility, especially on that spike, if we could sell calls around 200, but not quite this morning.
Yeah, not quite there yet. I mean, Coles, look at this. Last week, when the markets were just selling off, Coles was up almost 8%. This morning, down a little bit again, and we'll see what happens here. Also wants to push back into the range that has been established previously here. Nothing to do right now with Coles, and I mean, this is where we just need to wait. Will we get the good news that everybody is hoping for, that we see this very quick V-shaped recovery, or will it get worse before it gets better? Merck this morning also down 1.2%, kind of in line with the overall market. Nothing for me to do there. Still interested in flying a rescue mission here for Merck. And then UPS, we both flew a rescue mission here on UPS. Also, this morning lower because uncertainty. How will it impact the international business of UPS when there is a global trade war, or if there will be a global trade war?
And we'll have to see.
We have to see. I know that you're clicking around in the background because there's so much going on right now, and markets really just waiting for the tiniest shred of news, for an excuse to move higher. And we'll take a look at what the markets are doing right now. Did
Well,
they get the news?
Marcus,
Yeah.
I was looking at my MU position.
Oh, yeah, yeah, of course. Sorry. Almost forgot about that.
Yeah, so I got into MU and I actually picked up some more shares today at 62.50. So I was able to sell some calls at 74, which is just a little higher than my cost basis right now. It got up to 72.46 on those rumors that tariffs could be postponed. And now is at 66.71. So this is one where I was able to take advantage of that dip this morning, selling calls, picking up some shares at a low price. We'll see where this goes, but a company that I like, and it did break down with the overall market, looking to see this rebound.
Yeah. And you were already able to sell some calls, right? Oh, yeah,
Yep.
we just mentioned that. Yeah. So, I mean, this is working out great for you, and we'll just see. And I mean, that's what I just said. News, news, news. Right now, what's happening? Are there more good news from the European Union? Are they negotiating? Is the US negotiating with the EU? We'll take a look at this in just a moment because we see lots of volatility this morning in the markets. And before we do, should we actually tell a dad joke, Mark? What do you think? Might as
Might
well.
as
I mean, to keep it
well.
light in these market conditions, right? Might as well just see if we can make you chuckle a little bit, or if we make you say, "Oh dear Lord," and then we take another look at the S&P here. But go for it.
All right, Marcus. Two dragons walk into a bar. The first one says, "It sure is hot in here." His friend snaps back, "Shut your mouth." I'm sorry.
Well,
I know.
see,
Yeah.
the other day I went to the doctor because I didn't feel too well, and he said, "Well, can you describe the symptoms?" And I said, "Yeah, Marge is the one with the blue hair, and Homer is the lazy guy." No, describe the Simpsons.
What?
Oh dear Lord.
I
Okay.
thought my dragon joke was bad, Marcus.
I think I
I
topped
don't
you.
think we should have told jokes today.
No, I think we should not have. We should not have. Okay. So let's take a look at a 5-minute chart of the S&P. Again, huge 8% move today from the low to the high. These were on rumors that Trump will delay tariffs, which quickly were um, debunked by the White House, saying, nope, that's not going to happen. So right now, still down. The Dow down 2.5%, the S&P down 2%, the Nasdaq down, VIX slightly up again. And this is where right now we wait for more news. And I really hope that we get some today. We will definitely get more news before Wednesday, where Wednesday is the big day, where tariffs being rolled out or not, depending on what we hear here over the next few days.
Yeah, I just saw a new headline saying President Trump threatening new 50% tariffs on China unless Beijing lifts its retaliatory duties on U.S. exports by tomorrow. So we'll see.
Well, see what China thinks about this. Anyhow, as you can see, there's lots to talk about in the markets. And if you enjoyed today's show, give us a like. Really appreciate it. If you believe that others can benefit from this information, feel free to share. There's a share button somewhere here. And also, I released a couple of videos on YouTube. If you're watching this on YouTube, I'll link to the videos right here so that you can watch it. And if you're listening to this somewhere on a podcast, hop over to YouTube and our channel, and you'll see what we released right there. Anyhow, with that said, gosh, keep calm and trade on. And most importantly, follow your plan. All right, with that said, have a great rest of the week, and we'll talk to you again next week.
Happy trading, everybody.